Hello students, in this video we shall review statutory provisions governing the company final accounts. Final accounts show the performance and financial position of a company. Statement of profit and loss, the balance sheet, the cash flow statement, statement of changes in equity and explanatory notes together make up the final accounts of the company. Major decisions are taken by various parties based on these statements. Therefore, it is important that these are drawn to present a true and fair review. To ensure this, the Companies Act has various provisions that guide and govern the preparation of final accounts of corporate. In this video, we will review some of the key provisions. Section 2 with the subsection 13 of the Companies Act 2013 defines books of accounts of a company to mean all those records that deal with number 1. Receipts and expenditure, number 2. Sales and purchases, and number 3. Assets and liabilities. Thus, every record that deals with either of these constitute books of accounts of a company. Perhaps you would wonder if store's ledger or other quantitative details are called as books of accounts. The answer is yes. Because Section 2 subsection 13 has used a general term records and not a specific term like monetary records. Next we look at Section 128 of the Companies Act 2013. Key requirements of this section are: number 1. Accounts including that of branch are to be maintained at the registered office of the company. Number 2. They should be kept for every financial year. Number 3. They should be kept in such a manner so as to give a true and a fair view. Number 4. They should be drawn on the principles of accrual and on the basis of double entry system. Number 5. They can also be maintained electronically. Number 6. They are to be maintained for a period of 8 years following the year to which they relate. Next, let's look at Section 2 subsection 40 of the Companies Act 2013. This section defines the components of financial statements. It says that financial statements of a company shall include number 1. A balance sheet, number 2. A profit and loss account, number 3. A cash flow statement, and number 4. A statement of changes in equity, and finally number 5. Any explanatory note related to these statements. Finally, we turn to Section 129 subsection 1 of the Companies Act 2013. This section deals with the form and content of the financial statements of a company. Its important provisions of this are: number 1. Financial statements should provide a true and fair view of the state of the affairs of the company. They are to be prepared in compliance with requirements of accounting standards issued by ICAI. Number 3. They shall be in form or forms as specified in Schedule 3 to the Companies Act. However, it may be noted that companies like banking, electricity, etc. that are governed by any other act shall not be bound to use Schedule 3 of the Act. So students, we saw some of the key provisions of the Companies Act 2013 governing the preparation of the final accounts of the companies. We have learned what are the books of accounts, in what form the final accounts are to be prepared, how and where the books of accounts are to be maintained, for how many years they are to be maintained. Trust you will find them useful.